studying your last two. I swim med when turned in. The staring down to mute. And can learn the pole that sunk he died.
Using your own personal automobile for business is very common, especially in owner-managed businesses and for employees who regularly travel to meet clients, suppliers, or customers. The most important point to remember is that ownership does not change simply because the vehicle is used for business. The automobile remains your personal asset. You are responsible for purchasing the vehicle and paying for expenses such as fuel, insurance, maintenance, repairs, and financing costs. However, when you use that personal vehicle for business purposes, the corporation may reimburse you for the business-related use of the vehicle. This reimbursement is typically based on the number of business kilometers driven rather than on the total cost of owning the vehicle. That is why separating business travel from personal travel is so important. Business trips may include traveling to client meetings, visiting suppliers, going to the office, attending the bank, or other activities directly related to earning business income. Personal trips, on the other hand, include commuting for personal reasons, shopping, vacations, family outings, and other non-business travel. Only the business portion is relevant when determining the amount that may be reimbursed. To support that reimbursement, accurate records of business kilometers should be maintained throughout the year. This allows both the taxpayer and the corporation to demonstrate that the reimbursement relates only to business use and not to personal driving. For tax preparers, the analysis is straightforward. First, confirm that the vehicle is personally owned. Next, determine the business kilometers driven. Finally, review whether the reimbursement or automobile allowance has been calculated correctly. The key takeaway is simple. Using a personal automobile for business does not change who owns the vehicle. It remains a personal asset. Only the business use is relevant for tax purposes, and accurate mileage records are essential to support any reimbursement received from the corporation. When you use your own personal vehicle for business, the amount you are reimbursed depends on one thing above all else: the number of business kilometers you drive. This is why maintaining an accurate mileage log is so important. A good mileage log records every business trip, including the date, destination, purpose of the trip, and the number of kilometers traveled. Whether you use a paper logbook, a spreadsheet, or a mileage tracking app, the goal is the same: to create reliable evidence of your business driving. Typical business trips might include visiting clients, traveling to the office, meeting suppliers, attending sales calls, or going to the airport for business travel. These are all examples of business kilometers that should be recorded. The corporation may then reimburse you for those business kilometers by paying a reasonable mileage allowance or reimbursement. When the reimbursement is based on actual business travel and is reasonable, it is generally treated differently from a company-owned vehicle benefit. The focus is on compensating you for using your own vehicle for business rather than providing you with a personal benefit. Personal driving, however, is different. Trips for shopping, vacations, family outings, or other personal activities remain personal expenses. Those kilometers are not business kilometers and should not be included when calculating a business mileage reimbursement. This is why tax preparers place so much importance on accurate documentation. Without a mileage log, it becomes very difficult to demonstrate how many kilometers were driven for business purposes. That can make it challenging to support the reimbursement if the CRA requests evidence. The key takeaway is simple. Business kilometers should be carefully tracked. Personal kilometers should remain separate. And every reimbursement should be supported by accurate mileage records. Good documentation not only makes tax preparation easier, but also helps ensure that business reimbursements are properly supported if they are ever reviewed by the CRA. Using a personally owned automobile for business can be both practical and tax efficient, but only if it is supported by good documentation and consistent record keeping. The first and most important habit is maintaining a detailed mileage log throughout the year. Rather than trying to recreate business trips months later, record each trip as it happens. Include the date, destination, purpose of the trip, and the number of business kilometers driven. Whether you use a notebook, spreadsheet, or a mileage tracking app, the key is to keep the records accurate and complete. It is equally important to separate business travel from personal travel. Only business kilometers should be included when calculating reimbursements or claiming business-related automobile expenses. Personal trips should always remain separate. Supporting documents also play an important role. Keeping fuel receipts, repair invoices, maintenance records, insurance documents, and periodic odometer readings provides additional evidence that supports your mileage records and helps verify the business use of the vehicle. From a tax preparer's perspective, these records make the year-end review much easier. The accountant can compare the mileage log with reimbursement schedules, verify that the reimbursements are reasonable, and ensure that the correct tax treatment has been applied. On the other hand, poor documentation creates unnecessary risk. If there is no mileage log, incomplete records, or unsupported reimbursement claims, the CRA may request additional information during a review. Without adequate documentation, reimbursements may be questioned, adjustments may be required, and additional tax, interest, or penalties could result. Good record keeping protects both the taxpayer and the corporation by providing clear evidence of the business use of the vehicle. The key takeaway is simple. A personally owned automobile can be an efficient way to conduct business, but good documentation is essential. Accurate mileage logs, clear separation of business and personal travel, complete supporting records, and reasonable reimbursements help ensure the correct tax treatment and significantly reduce the risk of CRA disputes.